Okay, folks, welcome to Swing Trading Today. This is Bob Desmond, and it is August the 27th, 5:08 in the a.m. Eastern Standard Time. Let's get to what we're going to talk about this morning. First up is going to be our watch stocks. I discussed two of them over the weekend. We're going to revisit them. And then we're going to segue over into the pre-market activity to see how the futures are trading, whether they be commodities or stock market futures. We will have a conversation about how they look in the pre-market. But before we get to the charts, a note from our sponsor, which is TrendSpider. You're looking at the chart right now of TrendSpider. They are the next level in automated technical analysis. Trend lines with a click of a button. You're looking at a daily chart. You want to overlay weekly support and resistance levels, click a button. There they are. You want daily on a daily chart, click a button. There they are. You can minimize these. You can take a few off. You can customize it however you like. You can do back testing, trade alerts, etc. Extremely time efficient and frankly cost efficient technology to make you a more dynamic trader. And I believe in the product so much that I've included TrendSpider in both my silver and gold level memberships. So if you're interested in TrendSpider, click the link above. If you're watching this on the website, click below. If you're watching this on YouTube, and use CT25Z as your discount code. Again, CT25Z. Let's get back to the charts. Okay, Google, daily chart. I spoke about Google over the weekend. I was looking for a break of weekly support as seen here. We didn't get it. No follow through to the downside. In fact, we broke out and above the upper band of resistance. Do I think that Google is going off to new all-time highs? Probably not. When will I change my mind? If we close above the 1200 level, I'd have to give it some real serious consideration. But we've been there before. We've been rejected before. And the headline risk for Alphabet Google is very, very serious. Taking a look at a 4-hour chart. Again, here we have our weekly resistance levels overlaid. And you can see we did bounce off of the lower band of support. We are now rallying up and into the upper band of resistance. So what's the play here? Well, what I would want to do is I would want to look to open up a bear put spread. You sell a deep out of the money put option and you buy an out of the money put option. The sale of the deep out of the money put option helps finance your trade. And that way you minimize your out-of-pocket expense and your risk. Now, ideally, we see a break to new weekly lows because that increases the probability that that trade will become profitable. Were to open it up right now, it would be somewhat speculative. I'm not against doing so, but I do not want to get overly aggressive to the short side with the shares of Google until such time as we break to new weekly lows, because we have a big air pocket between 1171.86 down to the 972 level. So this is a big void that could be filled. You do have some minor support levels below. Now, when does Google come off of our radar screen as being a short? Surely we can't be hanging our hat on the fact that the DOJ is going to file antitrust motions against the company. No, we can't. We can't hope when we should fear. If we close above this upper band of resistance here, I would become very concerned about being short the shares, especially if we close again above the 1200 level. But as it stands right now, these shares are under pressure. They haven't broken yet, so I would not go aggressively shorting the shares as of yet. Might I scratch the itch and nibble to the short side? In all probability, I'm going to. And you could see that on a monthly basis, we have an alert set for when we break this primary lower band of support. Also on a monthly basis, we have lower highs and lower lows on RSI. Stokes lower highs as well. So a warning flag on the track for Google's, but I would not get overly aggressive to the short side until we break support. And yes, we do send out trade alerts to our members. All right, the next chart up, USLV, or if you want to trade the SLV, that's fine. There's the SLV, very similar charts, right? One is just a leveraged ETF. Let's go back to the USLV. That's the one I trade because I want the volatility. Now, we were long of USLV. We booked some profits as it became very overbought. And this week, we have put in a new weekly high. We did not go chasing because that is not the strategy that we want to use to get long of USLV again. But you can see clearly that we have broken out of a W formation on a weekly basis. When you take a look at the shares on a daily basis, again, we gapped up higher yesterday. You can see that we have a wick or a topping tail on that candlestick. That's a sign of sellers above, because going back to the weekly chart for a moment, please keep in mind that you have a ton of overhead supply back here. These buyers who bought and held through this downtrend, all they want is their money back. They're not looking to make a profit. They've been sitting for the past couple of years with a red entry on their trading platform. It's now turning green, and they want their money back. They want to break even. So that's the psychology, daily chart. Ideally, what I'm looking for is a pullback and a retest of support. I want to see the same thing on RSI. If we are successful and we do hold, that's when I want to begin accumulating a position in the USLV. Now, over the weekend, I mentioned that we had monthly resistance above, and I didn't expect it to act as much of a threat to the shares. Here we have it. Here's our resistance level. We cleared it like a hurdle jumper yesterday. But that doesn't mean we can't pull back, retest that support level, and ideally the 92.25 level on USLV. So we'll continue to watch it. I'm not going to chase it. So members, more to come on Market Wrap as we close out each trading day. Let's head over to the pre-market activity, see what's going on. Okay, let's kick things off with the US dollar index. And we are down this morning. We did gap up yesterday, a very strong day yesterday, but we were stopped dead at resistance. Now we are rolling over yet again. Now, moving forward, what I want to take a look at are yields and the dollar together. And I mentioned this to members last night. I was asked about what my major concern was. What am I looking at on the charts to tell me that we have some real serious problems on the horizon? And my real serious concern is the drop in the bond market, the price of bonds, and the rising of yields, along with a decline in the US dollar, because that means our borrowing costs are pressing higher and the buying power of the US dollar is diminishing. So it really has a major vice grip effect on the consumer. And not to mention the federal government, who must pay the interest on our debt. And what do? When they can't pay that interest? They're going to come to the taxpayer and raise taxes. So you're seeing yesterday a sell-off in the 10-year bond. We're limping back this morning. So let's keep an eye on them. That's real serious problems if both the dollar and the bond market begin to weaken. And the psychological effect of that is there's a loss of faith in the U.S. economy. Now, we know the dollar is weak this morning. We're seeing a limp back on bond prices. Let's take a look at gold. Gold was up higher this morning. When I first woke up, it was up about $6. We've pulled back some. No real reaction to the weaker U.S. dollar, but we were overbought, and we could be just simply consolidating gains here. We remain long of the gold miners. We're looking to add. The gold miners did break out on a daily basis yesterday, in fact, on a weekly basis as well. So we remain quite bullish on precious metals, and we're looking for a breakout on this 4-hour chart for the price of gold. Let's take a look at natural gas. Natural gas had a very good day. We're long of natural gas using a leveraged ETF. It's not a major position, but we will probably be adding more fairly soon because we did break out on a daily basis. You can see we were overbought relative to the third standard deviation Bollinger Band. Now we're settling back in. So what I'd be looking for here is a continuation move higher out of this bull flag setup on a 4-hour basis. So nat gas looking really, really good here. Just keep in mind that on Thursdays you have the nat gas inventories report coming out at 10:30 Eastern Standard Time, and that can move the prices. But it's a weekly number, very volatile. Let's leave off with Bitcoin. I haven't looked at Bitcoin in a couple of days. We're holding the 10,000 level. Not much going on here. So again, like I always like to do, I want to take my crayon out, draw a line in the sand, and wait for the breakout. You can see these Bollingers, the Bollinger Bands on a 4-hour basis, they're tightening up. So the tighter they get, the more powerful the breakout. I don't think we're breaking down here. I think we're going to be breaking out on Bitcoin. And that is it for today, folks. Everybody have a profitable trading day, and I'll talk to you soon.